So, you thought you were coming to a presentation, but this is actually going to be a little bit interactive. Who here believes in climate change? Okay. It's actually a little more than I was expecting. So, as a newsletter writer, we get to interact with all sorts of people from different parts of the world and different parts of the spectrum, political spectrum, and maybe different spectrums as well. But, we ask that question a lot in our newsletter, and the answers we tend to get are, on the one end, we believe that is an existential crisis. The world is literally burning right now. On the other hand, it is a conspiracy by a cabal of globalists set to take our property and ruin our lives, et cetera, et cetera. Even though I would say most people sit somewhere in the middle. And the point of this conversation today is that what I want to make is the case that whether you believe in climate change, whether you don't believe in climate change, wherever you sit, that is probably not the right answer, not the right question. It's not the question to be asking. What you should be asking as an investor is, what do the people that control the biggest amounts of capital, the largest investors, corporations, governments, NGOs, et cetera, believe? And I think we can all say overwhelmingly, the most powerful, wealthiest people in the world believe that climate change is an issue that needs to be addressed, and there is billions, hundreds of billions, maybe trillions of dollars allocated right now to addressing that. So this was sort of the macro theme that got me really thinking about 2 years ago where I wanted to be investing my own money. And as our lovely introducer said, I run the Resource Insider newsletter. My whole job every day with my partner there, Nick D'Onofrio, is to look for good investments in the mining, energy, and natural resources sector. And where we consistently saw ourselves making the most money, the biggest success, were in the quote-unquote energy metals. These are things like lithium, these are things like copper, these are things like nickel, these are things, even uranium, where we were seeing our biggest successes. And that got me on to the idea of carbon credits, particularly voluntary carbon credits. And this title here, Is Carbon the New Gold, is a little tongue-in-cheek, but I want to paint the case today that what we're seeing in the carbon credit sector is akin to what we were seeing in the gold sector back in the 1980s. And there is a comparable opportunity there for us. So we're going to start with a little bit of a quiz, and we're not going to be starting to talk about a carbon company. We're going to be starting to talk about a gold company. So if you could raise your hand when you know the answer to this question. So this is a company that was launched in 1983. It was founded by a French-Canadian electrical engineer and an oil and gas research analyst. That French-Canadian electrical engineer graduated 48 out of 50 in his class at Laval University in Montreal. They raised about $2 million and listed on the TSX. Anyone know what I'm talking about here? They applied a new financing model to gold that was common in the oil and gas sector. They consistently outperformed gold bullion and gold miners and returned, and this is the very interesting part, an average of 38% per year for 20 consecutive years. Today, they're just over a $30 billion company. You might have guessed it, that company is Franco-Nevada Gold. It is the pioneer of the streaming model, or rather the royalty model in the gold sector. And what's really interesting about it is Seymour Schulich and Pierre Lassonde. Seymour was an energy analyst. He'd seen the impact of royalties in the energy sector, in the oil and gas sector, and he simply took that model and applied it to a new industry. And I say a new industry, gold had been mined for about 5,000 years at that point, but no one had really consistently applied this model in a publicly traded company. The result was Franco-Nevada. So let's take a little second and look at the environment that they created that company into. So today, on average, or as of last year, there are about 115 million ounces of gold produced, mined, generated every year. That represents about $200 billion in annual revenue for the entire gold space. And if you were to add up the equity of every publicly listed gold company, you would have just under $400 billion. Today, there are 22 publicly listed gold royalty companies and precious metal royalty companies. They have a combined market cap of $69 billion. what is interesting to me about this is that in 40 years, these guys took about 20% of the value of an entire sector. This hasn't really been around for that long, and they massively outweigh, in my opinion, sort of their share of the market cap. So what Pierre Lassonde, what Franco-Nevada did, was they saw an opportunity to really capture value in a space. Okay, now I want to talk about what we're seeing in the carbon sector. And by carbon, I mean the carbon credit sector. Has everyone here heard of carbon credits? One guy, more than one guy. The very simple explanation of a carbon credit is if you do something that either removes carbon from the atmosphere or keeps it from being generated in the first place, you create what is called a carbon credit. That carbon credit can then be sold. And so if I'm a company, if I'm Exxon and I produce 1 million tons of greenhouse gas emissions every year and I buy 1 million carbon credits, that essentially creates a net zero. So that's the idea of a carbon credit. Last year, 2021, 100 million carbon credits were sold in the voluntary market globally. So the average price, about $10 per credit, that represents a $1 billion market. So if we remember back to gold, $200 billion market per year, $1 billion market in carbon, about 1/200th of the size, a very, very tiny market at this space. But the question isn't really where we are today, it's what's coming next in this sector. So everyone here probably knows who Mark Carney was. He was the head of the Bank of Canada, then the Bank of England. He's gone on record saying that this space needs to grow by 50 to 100 times in order to meet the demands of the companies and the institutions that are saying that they're going to hit net zero. If you look at that little graph up the side, that shows the number of greenhouse gases that are produced every year in tons. So right now, we produce on average 50 billion tons of greenhouse gas emissions every year across the globe. And today, there is 25% of the world's 500 largest companies that are saying that they will reach net zero by either 2040 or even before that. And so that represents about $14 trillion in revenue that is generated from those 25% companies every year. So there's a huge amount of money and a huge amount of companies that are saying that they need to buy these credits. Shell's committed alone. So Shell, one oil and gas company, has committed to buying 120 million credits per year by 2030. So that's one company that's committing to buy what was the entire market last year. So, this is a supply and demand fundamental we really don't see, in my opinion, in any other space. That doesn't include Exxon, that doesn't include Amazon, that doesn't include Microsoft, who's committed to offsetting every emission they've ever generated from inception back in the 70s. So if we do a little bit of math, I said earlier that there were 50 billion tons of greenhouse gas emissions every year. If people are actually going to hit net zero, that means they have two options. They can either organically reduce the amount of greenhouse gas emissions that they produce. They can do it by switching to renewable energy, streamlining their processes, electric vehicles, etc. If they can't do that, then they have to offset it. And the problem for this is that there are many processes that you simply can't reduce away. So for example, the cement industry produces 8% of all greenhouse gas emissions. 5% of that is actually from the cement process. And this is something that can't be easily undone. So the only option left to these companies, if they can't reduce it, is to offset it. So that means buying carbon credits. And if we take a conservative view and say, okay, of that 50 billion tons, maybe we're able to reduce 80% of that. I don't think anyone here with a reasonable mindset probably believes that, but let's say we can, and there's 20% left. That means you need to you have to offset 10 billion credits every single year. So we'll do a bit of math here again. At $10 a credit, where these things were trading last year, that makes it a $100 billion market. So it has the chance to go from where we were last year, a $1 billion market, to a $100 billion market. But that's at last year's prices. Today, carbon credits are trading on average $12 to $15 a credit. Basically, every serious analyst in this space predicts there'll be $20 to $40 per credit by 2030. So if it hits $20 a credit, it's a $200 billion market. If it hits $40 a credit, a $400 billion market, so on and so forth. So it's a sector that has the potential to be the size of the gold industry, or maybe much, much bigger than that. Any questions so far? Okay, so I want to summarize what Franco-Nevada did and why I think we're seeing a similar opportunity today. So Franco-Nevada did a few things right. They had a first mover's advantage. So what's the difference between a Franco-Nevada, which is a $30+ billion company, and a Sandstorm Gold today, which is a $2 to $3 billion company? I would say the big difference is that Franco was there first. They got there in 1983. They were buying up royalties at very, very cheap prices before people really understood the value that you could get from these things. Today, gold royalty companies are lucky to squeeze a 1 or 2% IRR out of the projects that they're buying today. People understand the value, the margins have been squeezed. Franco got there first. They applied a proven business model to an established industry, a new space that hadn't seen it yet, taking it from oil and gas to gold. They had gold price on their side. So from 1983 to when they first sold Franco-Nevada in the first iteration in 2000, gold price went up 5 times. And then they created a vehicle for generalists. The real beauty of Franco-Nevada is that they made it very, very easy for generalist investors to invest in gold. You know, gold mining is a risky business. Things go wrong. Gold companies tend to trade at a discount to NAV, net asset value. Gold royalty companies tend to trade at a premium to NAV, 2 to 3 times net asset value, because they can diversify their assets. They can be in different projects, in different stages, in different jurisdictions. They don't take on any of the capital overrun costs or the operating costs. This is highly appealing to the generalist investor that wants to invest a small amount of money, but a meaningful amount of money into gold. Franco-Nevada created the vehicle that attracted that. So the result today, royalty and streaming companies make up 18% of gold equities. We covered that before. They trade at 2 or 3 times their net asset value. So if you have a royalty that's worth $1 million, you put it into a publicly traded company, it will typically trade at 2 or 3 times, so it'll translate to $2 to $3 million in value in that company. So it's a really, really powerful model, and it creates really cheap capital that allows people to go out and continue doing transactions, continue growing. Royalty companies consistently have the highest profit margins in the gold sector. Again, highly appealing to generalist investors. What again is really interesting to me is that of the 22 publicly listed gold companies that are out there, 3 of them make up 86% of the market cap value of that. So it's Franco-Nevada, Royal Gold, Wheaton Precious. Again, the early ones, they got all the low-hanging fruit, they captured the market, and I'm invested in several other of the smaller gold companies, but at the end of the day, the little guys are kind of fighting for scraps at this point. The real money was made early in the deployment of this model. When we take this to the carbon industry, I kind of see a setup that's even bigger, even better for this. First of all, it's an industry that's expected to grow 20 to 40 times over the next 8 years. 20 to 40 times. And what is very interesting to me about carbon is it doesn't necessarily have quite the same cycle as gold or oil and gas that we see in most commodities, because carbon credits are designed to go up in price. Every government, every capital allocator, every company, every institution, every activist, every NGO wants carbon credits to go higher in price so that they actually incentivize people to stop generating greenhouse gases. So it's getting pushed higher. So that 20 to 40 times, I do believe, is a reasonable number. It's very, very hard to play this space right now. And whilst Franco-Nevada created an amazing vehicle for generalist investors to invest in gold, the opportunity in carbon is even bigger. Who here knows how to buy a carbon credit? 1, 2, 3 people. Who here knows how to buy a gold company? That's true for professional investors, retail investors, everyone. And the biggest funds in the world, they don't have the mandate to go out and trading carbon credits on obscure registries, but everyone wants exposure to this. So I think the potential to attract capital here is really unparalleled. To date, there are 2 listed companies that I'm aware of in this sector. They have a sub $500 million market cap combined. Again, look at this, Franco-Nevada alone, a $30 billion company, Wheaton Precious, Royal Gold, comparable sizes. I believe we're going to see this in the carbon sector as well, multi-deca-billion dollar companies. I wanted to find the best way to invest in this sector. I'd spent the last 5 years investing in mining, royalty companies. I didn't see the way that I was looking for in the carbon sector, so we launched Vida Carbon at Inventa Capital. Vita is a royalty and streaming company focused on the carbon sector. Given the time, I'm only going to go through this very, very quickly. What makes us unique? If anyone has any questions after that, please come see me. I'll give you a card. We can chat about it. But there are a few things that I think make this a very, very special opportunity. I'm the chairman of this company. I'm extremely excited. It's the first public board I've ever sat on. I have turned down a lot of mining companies because I didn't see the scale of opportunity, but this was something I really didn't want to pass up on. So the number one thing is direct exposure to carbon markets. Royalties and streaming work very, very well. It allows you to easily invest and get exposure to the voluntary carbon markets. You can trade it like a normal stock. You don't have to sign up with obscure registries. It's a simple way to get this into your portfolio. Strong market fundamentals. We've talked about this at length. Again, experts agree this market is primed to grow 20 times by 2030. So just 8 years. High quality portfolio of carbon credits. So today, Vita, the projects in our portfolio, we've signed 4 deals. We are on track to receive more credits per annum from our streams, not only than any one of our competitors in the space, listed or otherwise, but all of our serious competitors combined. And we've done that by partnering with an extremely strong team and building it internally. The first thing we realized when we started in this sector is that this is a highly, highly complicated technical space. I'm a mining engineer. I have a ton of appreciation for technical skill sets. I recognized I didn't have them in the carbon space. So we went out and interviewed the top 6 carbon consulting firms in the world. We identified what we believed was the strongest one, a group called Clear Blue Markets. And we pitched them our idea. We said, we want to work with you. They liked it so much, they invested $2 million of their own money. We have a strategic partnership with them. They own 17% of the company today. It has allowed us to roll out our business model very, very quickly, build a portfolio faster, and I believe stronger than anybody else in the market today. We have a very defined use of proceeds. We've raised capital to date. We've raised just under $20 million. We will raise money again one more time before we list later this year. We need to invest $29.7 million into our current portfolio of assets. That money is not going to be sitting in a bank account to pay for fancy dinners or nice office space. It is going to be put to work in the market to create value for shareholders. I have 45 seconds left. I think that's all I can do today. Thank you guys very, very much. If you have questions about carbon, if you have questions about Vita, if you have questions about Resource Insider, please let me know after this. Thank you.